Welcome back to part two of our deep dive into Richer, Wiser, Happier by William Green. If you watched part one, you now understand the foundational mindset of the world's greatest investors: temperament over intelligence, simplicity, resilience, and long-term thinking. Today, we're going to zoom in on some of the most legendary investors Green interviewed: Warren Buffett, Charlie Munger, Mohnish Pabrai, and Nick Sleep. We'll explore their unique strategies and the surprisingly human philosophies behind their financial success. Grab a notebook, because these lessons are powerful. Warren Buffett, Circle of Competence. Warren Buffett needs no introduction, but William Green goes deeper than the usual biography. One of Buffett's most valuable principles is the circle of competence. This is the idea that you don't need to know everything. You just need to know your area well, and avoid areas you don't understand. Buffett sticks to businesses he understands thoroughly: insurance, banking, consumer products. He doesn't touch tech companies unless he understands them deeply, which is why he waited years before investing in Apple. For us, this is about self-awareness. If you understand retail, focus there. If you know real estate, go deep there. Avoid complexity, stay in your lane. Buffett also emphasizes patience. He compares investing to a baseball game with no called strikes. You don't have to swing. Wait for the perfect pitch, then go all in. Charlie Munger, Mental Models. Charlie Munger, Buffett's longtime partner, is another intellectual giant. He brings to investing a multidisciplinary mindset. Munger believes that to make good decisions, you need what he calls a latticework of mental models. These are core ideas from disciplines like psychology, economics, physics, biology, and more. By combining mental models, you develop worldly wisdom. You see connections others miss. You recognize cognitive biases. You avoid traps. For example, Munger is a big believer in inversion. Instead of asking, "How can I succeed?" Zerania asks, "How can I fail?" Then avoid those things. Simple but incredibly powerful. Munger also lives by the idea: avoid stupidity more than trying to be brilliant. If you simply avoid big mistakes, the compounding will take care of the rest. Mohnish Pabrai, Cloning and Simplicity. William Green spends a good chunk of the book talking with Mohnish Pabrai, a Buffett disciple who took cloning to a whole new level. Pabrai's strategy is simple: copy the best ideas of the greatest investors. He openly clones Buffett and Munger. He reads Berkshire letters religiously, but Pabrai also clones other greats like Nick Sleep. Why try to reinvent the wheel when others have already figured out what works? Pabrai also emphasizes low-risk, high-uncertainty bets. These are investments where the downside is limited, but the upside is huge. He compares investing to the game of bridge. It's about probability and discipline, not emotion. One of his core beliefs: heads I win, tails I don't lose much. This mindset gives him a huge edge. He's not trying to predict the future. He's looking for mispriced bets with asymmetric outcomes. Nick Sleep. Focus on quality and time horizon. Nick Sleep might be the least famous of the group, but his story is incredibly inspiring. Sleep ran the Nomad Investment Partnership, where he returned 20% plus annually for over a decade. His secret? Quality and patience. He invested in companies like Amazon and Costco long before they were market darlings. What made him different? His time horizon. While others looked 1 to 2 years ahead, Nick Sleep looked 10 to 20 years ahead. He asked, what kind of business will still dominate 20 years from now? Who will keep compounding shareholder value regardless of market noise? He called this the scale economics shared model. When companies grow and pass savings on to customers, creating a flywheel of loyalty and dominance. Nick Sleep eventually returned all his investors' money and retired to live a quiet life. Why? Because he wanted freedom, which is the ultimate wealth. Common themes among these giants. Let's pause and reflect on what unites these diverse investors. They value simplicity. Whether it's Buffett avoiding complex businesses or Pabrai cloning proven ideas, they keep it simple. They are incredibly patient. They hold for decades. They wait for opportunities. They never rush. They think independently. They don't follow the herd. They often look wrong before they are proven right. They manage risk obsessively. They avoid big losses. They prioritize capital preservation. They are humble learners. They read constantly. They know what they don't know. They keep improving. Your action steps. So how can you apply this? Define your circle of competence. Know where you excel. Stay out of what you don't understand. Study mental models. Learn from psychology, biology, and other fields to improve your decision-making. Clone intelligently. If you find an investor with a proven track record, study their process and portfolio. Focus on long-term compounding. Find high-quality businesses with durable advantages. Eliminate big risks. As Munger says, avoid stupidity. Final thoughts for part 2. The greatest investors don't chase performance. They develop a personal philosophy. They stick to it through thick and thin. This part of the book shows us that real investing success comes not from chasing the market, but from mastering your mindset and process. In part 3, we'll explore how these investors build resilience and live balanced lives. It's not just about money. It's about building wealth that lasts and a life that matters. If you got value from this, hit like, subscribe, and drop a comment. I've also added helpful resources and affiliate tools in the description below. Check those out to support the channel and grow your investing wisdom. Thanks for watching, and I'll see you in part 3.